The awesomeness of the new tax bill. No, this is great. I know everyone's done a video on this, and I haven't really watched that many about there. I don't know what other people are talking about, but there is some great stuff in here. It's fantastic. All right, so let's look over here to this is the One Big Beautiful Bill from the Tax Foundation. Yeah, there's so much great stuff in here. All right, let's look at this. So, extension of current individual income tax is now made permanent. Increased standard deduction and child tax credit. Permanent. Permanent. Are you hearing this? We're also making permanent the elimination of the personal exemption. So you have a much higher standard deduction that is permanent. It's not subject to a sunset law. People forget the first Bush, I think it was 2001, his first tax cut was also subject to a sunset. Okay. And so was the TCJA. Okay, all right, what are you doing, buddy? Subject to a sunset. And so when the Bush tax law expired, or was about to expire, it looked like it could be a massive, massive amount of increasing estate tax and all this, never mind income tax rates and all that. It was bad in 2011 and 12. Yeah, 2011, 12. Yeah, 2011, 12. And it was like we were converting, because we had 2 years to pay the tax on Roth conversions in 2011, 12, because we thought we were going to get screwed by Obama. It didn't happen because Republicans took back the House in 2010. Did they take the Senate back in 2010? I can't remember, but they definitely took back the House. They went strong, so it didn't happen. But it was pretty dicey. And then we had TCJA. That's Trump's first tax bill. That also had a sunset provision on the income tax reductions. Here they're not. I don't get why not. The parliamentarian or whatever that freaking stupid person is rule. I don't know. But all I know is we have permanent tax reduction, income tax reductions. 10, 12, 22, 24, whatever the other ones are. 20, 33, 37, I think. This is huge. That means there is no 12, 15. It's fantastic. I cannot stress how big that is. Increased standard deduction. So for the Democrats to steal your money, they have to lower the standard deduction. They're going to have to literally pass a tax law to lower the standard deduction. They're just not going to do that, man. So this is huge right here. Right? These 100% bonus depreciation and R&D expensing. I used to be a business banker. And we'd have these Section 179 deductions and bonus of depreciation under Bush. And what that said is you can write off the expense for certain equipment, business equipment, that you put into service. You can write the whole thing off in that 1 year. You didn't have to capitalize it, essentially amortize it over 5 or 10 years. Huge. You'd have these business owners, man. They'd have these, we'd have general contractors. General contractors weren't a good client for the bank because they're very risky in terms of the cash flow and whatnot. But we'd have some GCs, and what they'd do is they'd have this big pickup truck, for the work, legit, and they'd write the whole thing off the first year, and they basically had very limited taxable income. It was fantastic. You got your real income, and then you got your tax books. It was great. So the same thing, having 100% bonus depreciation, Section 199, the qualified business income right there, permanent. Above the line deduction for charitable contributions, $2,000 if you're married, $1,000 if you're single. That's not going to be a huge amount, but if you're in a 22% tax bracket, $2,000 for married, that's $440 because the vast majority of us, 90% of us, don't itemize. So you don't even have to itemize. You give $2,000 to, I don't know, your local pregnancy center, which you should, to fight the liberal Planned Parenthood crazies with all their rich Wall Street money and Warren Buffett and whatnot. $2,000 you get to deduct right out the gate without even itemizing. It's like qualified charitable distributions. It's fantastic. IRA green energy tax credit changes, permanent. We're getting out of there. Fantastic. College, university endowment tax. Oh, man, that makes me so freaking happy. That makes 100% expensing of qualifying structures. We don't really know what the qualifying structures are yet, but a structure that is put into business. You get the right, if this is for business owners, not for personal residents, but you get to, like a warehouse, for instance, you get to write that whole thing off the first year as a 100% business deduction in year one. What do you think that does to your cash flow? Dude, it's freaking huge as opposed to amortizing over 10 years. That's freaking huge. Expanded SALT. Now, this is temporary right here. So 100%, that's temporary, I should say. So I want to point that out. And that's disappointing, but that is temporary. But look at this. Section 199A pass-through deduction is permanent right here. 100% bonus depreciation and research and development permanent. The senior deduction is temporary. All right, so in 4 years, the Democrats will, if Heels Up Harris wins, or Buttigieg, whatever, they'll have to go in there and say, hey, we got to steal your money. We're gonna have to, basically get rid of the senior bonus deduction. Okay, good luck with that. There, Heels Up. Ain't gonna happen. Same thing with SALT. SALT is state and local taxes. We're gonna have to, we're taxing more, so we're gonna have to reduce your SALT tax deductions. Ain't gonna happen. I'm telling you right now. So even though it's temporary, it's not gonna happen. No tax on tips, no tax on overtime. These are temporary things. I wish they're permanent, but that's okay. 4 years, dude. We'll take it 100%. Now, I don't make any tips, and I don't have any overtime because I work freaking 80 hours a week anyway. But at the end of the day, if you are working overtime, or you're a freaking truck driver, or working, I don't know, I think it was for Las Vegas for tax on tips and stuff, dude, you're freaking loving this, man. It's a deduction you get to take off your income, even if you're not itemizing. This is a big one right here. Auto loan interest deduction. Auto loan interest deduction. So basically, if you have $3,000 of, it can't be a lease, $3,000 of an auto loan, not leases, all right, which is too bad. But if it's an auto loan, you get $3,000 of interest, as long as that car, it's got to be a new car, was put together in the United States, was assembled in the US of A new vehicle. You got $3,000 of auto loan interest. You can write that off. And if you're 22% tax bracket, that's going to save you $660. I mean, I don't think we should be doing any deductions, frankly. I just say, hey, man, 25% if you're rich, 10% if you're not so rich, and send it in. You know what I'm saying? But here it is. So that's a huge thing. If you take an auto loan for a car that was put together, assembled in the US of A, you can write off some of the interest. That's a big deal. Don't tell me that, it's only the rich people. No, bull crap, dude. Now, obviously, I don't want you taking a loan to begin with, but still huge. So let's see. I want to kind of go over here from this right here. I had a guy email me today about the $6,000 qualifying or the senior deduction. He's like, me and my CPA couldn't find it. I was like, dude, time to get a new CPA because this is pretty cut and dry right here. But I couldn't believe it. I was like, come on, man. Your CPA's got to know this stuff. Temporarily add a senior deduction of $6,000 per person. It's $12,000 for me and Charlotte. Now we're not over 65, even though I'm getting there close to that. But it's both for itemizers and non-itemizers. It just increases your standard deduction. So you don't have to itemize. That's huge. And same right here with the auto loan stuff right here. Let's see here. Oh, I want to show you something else that's great. Limit the itemized deduction of 35 cents on the dollar for rich taxpayers. Taxpayers love it. I want to talk about this here, but I want to show you the auto loan thing right here. Right here. Temporarily make auto loan interest deductible for itemizers and non-itemizers. Again, you'd consider that above the line deduction. You don't have to itemize to take the $3,000. $3,000 is just the number I was using. But you don't have to be an itemizer to take the $3,000 of auto loan interest. It's freaking fantastic, dude. It's just money in your pocket, man. 100%. Deductions limited to $10,000 and phase out at a 20% rate when income exceeds $100,000 for singles and $200,000 for joint. So, okay, that's fantastic. $10,000, we'll take it. Take it. You get, $10,000 of auto loan is a big freaking vehicle, that's for sure. But $10,000, you can write that off. Again, that's if you're in a 22% tax bracket, that's a $2,200 of taxes you have to pay. This one right here, I love. Create a 0.5% floor on itemized deductions for charitable contributions. I wish it's higher. What that says is if you're Rich Warren Buffett and you're giving $1 million to freaking, for simplicity, let's say Warren Buffett makes $100,000 and he gives $1,000 to Planned Parenthood, the abortion factories. He can only deduct 500 of that. The first 500 of that is not subject to deduction because it puts a cap or a limit right there, what they call a floor. That's what they call it. Create a 0.5% floor on itemized deductions for charitable contributions. So Warren Buffett doing his evil stuff, he says, I can't get the first $500 deduction. I can only get $500 on that because, again, my income is $100,000. I'm giving $1,000 to Planned Parenthood. The first $500, because it's 0.5% of my $100,000 of AGI, I can't write off. I wish it's higher, but that's fantastic. So anyway, we're using that right there. 0.5% floor for itemized deduction for charitable contributions. We scroll down to the businesses, it gets even better. Look at this, dude. Make the Section 199 pass-through deduction with permanent, increase phase-in range of limits by $50,000 for non-joint returns, $100,000 for joint returns. So people like me are qualified business. You get bigger, you get more and more business income you get to write off. It's just fantastic. It's fantastic. That's a big deal. That's a big, big savings for small business for sure. Implement a 1% foreign deductible charitable contributions made by corporations. 100%, dude. They're scratching the freaking charity, the clean energy things. Check this out, which I love. They're still keeping, I want to show you something though. Eliminate clean electricity production credit and investment credit for projects placed in service after 2027, except for projects that begin construction within 12 months of passage and baseline power sources such as nuclear, hydropower, geothermal, and battery storage. All right? We're saying, hey, you're stupid windmills and solar because they're not baseload power structures. But for baseload power structures, nuclear, hydro, geothermal, and battery storage, we're going to have the freaking clean energy production is still the credit in there. Freaking dude, crushing. And here's the 100% expensive qualifying structures. Permanently restore the 100% bonus depreciation for short-lived investments. Oh, dude. Permanently restore 100% bonus depreciation. Permanently restore immediate expensing for domestic research. And we just talked about that. Look at that. Yeah, dude. Permanently restore bonus depreciation for short-lived investments. Permanently restore immediate expensing for domestic research and development expenses. Small businesses with gross receipts of $31 million or less can retroactively expense R&D back to 2021. Dude, it's crazy, man. Again, make Section 199A, increase it to $100,000, buy $100,000 for joint returns and $50,000 for non-joint returns. Oh, dude, it's freaking fantastic. It's fantastic. Where's the state? Then we permanently increase the estate and lifetime gift tax exemptions permanently, not sunset. I love it. I want to see the tax on. Establish a 1% remittance tax. That's huge. The House passed for 3%. So if you're sending money back to Mexico, you send $100 back, you're giving us $1. 100%. Absolutely. Should have been 5%, to be honest with you. The House had 3. The Senate didn't like 3, so we got 1. But that's a big deal. All these people taking our money and sending it back to their home countries, we're going to get a tax on that. I think it's friggin' fantastic. I love it. That's fantastic. Expand the Section 179 expensing cap. Yeah, there you go. I just talked about that. Section 179. I used to deal with this a lot when I was in the business right there. Raise the tax on student adjustment endowment of certain private colleges and universities in a new bracket structure with a top rate of 8%. Oh, man. I freaking love it. Expand, I don't know what this is. Expand the 490/60 tax on excess compensation to any employee of an applicable tax-exempt organization remuneration in excess of $1 million. Oh, dude, that sounds good to me. So if you're getting too much pay and you're running a nonprofit tax-exempt and you're getting a remuneration, I think it's remuneration, not remuneration. I think it's remuneration. Except for $1 million, you got to pay some freaking tax on that. Oh, dude, I don't know what the permanent CFC look-through rule, I don't know what that is. Dude, there's so much good stuff in here. So all these idiots, Trump, blah, 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 and it's freaking pound sand, dude. This Trump tax bill crushes. Everything is good about it. A couple things I wish they did better. I wish they had a 5% tax on remittance. I would love to have bigger tax on not just private universities, but public universities. I would say, I think, what if the localities, are they the ones who tax real estate for universities? I bet it is. I mean, we got to go after these nonprofits for sure. Trump's doing it, dude. So I know all the Epstein people are freaking out, dude. Look, there's a many front war. So we're going to take a couple of hits over here, but we're making massive gains over there. So don't freaking, come on. This is silly. You think Heels Up would have done better than this? Are you crazy to me? All right. God bless. Lots to do here. And again, once Right Capital is done with their analysis, we'll start crunching some numbers. Let's see Pablo, what do you think about the Trump tax bill? What do you think? Bark if you hate it, and don't bark if you love it. Yeah, Pablo's on the Trump train. That's right, baby. All right, God bless. We'll see you.